India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Morning, you're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. Tuesday morning. Yesterday was interesting. A market bouncing from the day's low, but not really ending at the high point of the day either. Lots to talk about. Lots of earnings still coming through. I'm Prashant. With me, my colleagues Nigel and Surabhi. Guys, hi, good morning.
Hi, morning. And Prashant, I think while you were away yesterday for work, we made sure the market doesn't breach at least the lower side of the range. We did our part. We did the best we can, Nigel, don't you think?
Well, that's right. And I think overnight we have quite a few earnings surprises, at least in line. No big howlers. So I'll take that because, the last few days, again, we had a couple of big disappointments like Asian Paints.
Yes, see how we've lowered expectations. We're just happy without the howlers, happy without the range being broken. That's how it is now.
As someone said, right, the recipe for it was in the context of marriage. Happy marriage is low expectations.
Lowering expectations.
Let's get straight to the market action.
With I think you can extrapolate that for markets as well.
This is Tuesday morning wisdom.
Especially at times like this, right? Anyway, let's just quickly run you through, the stuff from overnight because I think that's what you're going to begin with. So S&P 500 has ended above the 6,000 mark for the first time ever. So that's quite something. So it was a small gain, 0.1% or so higher, but we ended at 6,001.35 on your screen. Nasdaq, again, small up. The Russell 2000, which is the small cap index, ended about 1.5% higher. So that actually was the big one. Now, remember, cash bond trading was not there because of, I think there was a Veterans Day holiday. But a few other things. Bitcoin, for example, above $87,000. Tesla, another one which jumped about 8.5%. What's common with both these things? It's, they're all part of the so-called Trump trade in that sense. Dollar continues to move higher. And I mean, the dollar index is strong and how? Of course, it doesn't particularly help that one of the largest constituents which makes up the dollar index, the euro, is find itself in a particularly tough spot. So, US is sort of, at least in terms of flows, etc., pulling away. And of course, the euro is not getting any. So 105.52, about 0.5% higher. And now we're approaching an important resistance for the dollar index, 106.5, 107.35, which are the 2023 and 2024 highs respectively. Now, oil prices, they were down about 3%. Soft outlook for demand as far as China is concerned, largely to blame. We're at about 71.7 this morning. Lots of appointments coming through and pretty fast pace, especially on things like the border, etc. From the sort of to-be Trump administration. Appointments are coming through. The big one, which markets are waiting for, are Secretary of Treasury and, of course, Secretary of State. And I think those also we should have in the next 48 hours or so if reports are to be believed. But what we've heard so far, I mean, the Financial Times, for example, yesterday reported that Mr. Trump is inviting Robert Lighthizer, who was the U.S. trade representative during his first presidency, to take the same post once again. I mean, he's an out-and-out tariff person, and he was the one who kind of designed the higher tariffs with regards to China, etc. So he's largely and likely going to be back as the U.S. trade representative. So markets will continue to be sensitive to these appointments and, of course, policy hints directly or through some of these appointments as well. Just to kind of tie in the levels here, I mean, there's not very much new in that sense. On the way down, Nifty has got support in the 24,000 to 24,100 zone, a level that I've talked about in the past as well. On the way up, the 20-day is the first resistance, which is 24,436. And then you've got the 40-day, which stands at 24,659. That's a 40-day exponential moving average. For the Nifty Bank, I mean, you're basically broadly stuck in a pretty small range, 50,500 to about 52,577. Just go back and look at the last 10 trading sessions. I mean, that's the range that you are working with. 52,577, of course, was the recent swing high on the upside. And you need to kind of take this out, get out of this range for the market to give you further cues. GIFT Nifty will come up on your screen. and should give you a sense of how we are starting 30 points higher. So you're starting small, which isn't exactly a bad thing. Surabhi.
Okay, so 30 points up is the pop that's being indicated. Right now, Asian markets are actually a little more mixed than the one-way move on Wall Street. Wall Street's made a habit of breaking records, 6,000 on the S&P 500, 44,000 on the Dow. But there you go. This is what I was talking about. Some of the China-linked markets, they're actually under a fair amount of pressure. The Hong Kong market opened positive, but it's turned negative. Mainland Chinese market is absolutely flat at this point in time. The only market that's seeing consistent gains is actually Japan. Japan is up about 0.5%. So Asia is getting a little muddled. That's point number one. Just talk about, of course, the range for us over here. Even yesterday, the Nifty has been moving in a 250-point sort of a band. And the larger range, the consolidation patch that we've been in is about 23,800 on the way down and 24,500 on the way up. And this is a 700-point sort of parameter within which the market has been moving. So let's see if this continues or whether we will start testing higher levels. Yesterday's FPI sell number was lower than the kind of 3,500 crores, 4,000 crores that we've been seeing in the last many weeks. So the bulls were like that. The intensity of the selling came down to about 2,300 crores, and domestic institutions were offsetting a lot of that selling as usual with buying of almost 2,000 crores. Today, beyond all the tail-ender earning action, I'm looking out for the CPI number. That could give you a big headline because the sense is that consumer inflation here in India could cross the 6% upper limit of the RBI, which is why a lot of people are not expecting the RBI to jump on rate cuts anytime soon. This is largely going to be due to a base effect and due to the fact that vegetable prices, food prices have been soaring. So let's watch for this number, whether it indeed crosses the 6% mark. The previous month's number was about 5.5% consumer inflation. Results. Okay, so the way I look at it, there's nothing that's lighting up the chart. So that's really making you sit up and take note of positive cues. On Britannia, the revenue and volume number is in line. Remember, we were discussing this with Mangalam, where the volumes can be 8 to 9%. They are 8%. The issue is on margins. There's a massive margin miss that Britannia has reported, 16.8% versus expectations of a 19% margin. It's also a major 300 basis points decline. So Britannia, that explains the nervousness as the market was getting it ready for those numbers. Jubilant Foodworks, I mean, they're in line technically, but operationally nothing great. The margin's down about 160 basis points here as well. Shree Cement's Nigel will talk more about, and I think at least that's the point that we're making, that at least it's in line with estimates. But if you look at it year on year, then things are sort of sluggish to lower. I think even here there's a bit of a margin disappointment, big crack on margins compared to last year. Bank of India is a bit of a silver lining because at least with some of these PSU names, there are no asset quality issues that are showing up. So perhaps that could be, a little bit of positivity. But overall, I guess, Nigel, we're looking at the market still being in a consolidation patch, waiting for more clarity. The US market is charging away. We didn't mention Bitcoin, by the way. Now approaching 90,000. Do you have any?
Well, the Trump effect, and I don't have any. I don't intend to have any because I don't invest in things that I can't understand, but I've missed the bus. All right, we're getting to the top cues then. The FIIs, well, the sell number coming in from them is the lowest that we've seen in the last few sessions, which is encouraging. The Chinese stimulus isn't as good, and the FII, the selling exhaustion could be coming up out. So I want to see whether or not that number can even get smaller or hold around these levels, which will be encouraging after the big selling that we've seen. The Nifty Financial Services Index, that'll play out its weekly expiry today. And, the dollar index, that's still holding at around the 105.5 odd mark. That's a bit of a worry. I think the key to track with regard to flows and getting far more favorable FI data is going to be this dollar index cooling off from around this 105.5 odd mark. Yesterday, we did see a bout of short covering that did take place, particularly on the Nifty Bank, because you saw the open interest that was down by close to around 2.5%, and the Nifty Bank, in fact, ended higher in trade. And that perfectly tallies in with what the FIs did. Mild short covering, 1,500 contracts on the short side were covered out, and they added some mild longs as well. So after a while, we saw a swing factor of close to around 4,500 contracts in favor of the longs in yesterday's trading session. It remained net short, but there was a swing factor in yesterday's trade. Two strikes that were active, 24,300 call, 24,000 put. Both of them, the premium around 50 to around 60 rupees. So you just plug in these numbers. And as I mentioned yesterday, 23,950, that becomes the first reference point on the downside. On the upside, you'll get confident only once you get, past higher levels, which is at around 24,350, going by the writing that we've seen at around the 24,300 call. The Nifty Bank, that came to the party yesterday. From the lows of the day, it saw a big increase. And in fact, on a closing basis, it conquered the 20-day MA. However, the 50 DMA remains elusive. So the bulls will like to get that level out of the way. And HDFC Bank of late, it's become an outperformer in comparison to what the market does. And it's holding one end up. Now it's only 1% away from its 52-week high, which is telling you leadership is back with HDFC Bank. That's why the Nifty Bank is holding strong. So let's get the levels up for you on the screen. Yesterday's high and low, they become the crucial reference points. You want to get past that mark. That's yesterday's high on the screen. I'm looking at 3 stocks and 3 underperformers of late. But the numbers, they had something to cheer in all 3 of them. Hindalco, the Novelis's numbers were very disappointing. The stock saw a sharp hit. Yesterday, the stock was a bit of an outperformer, but these numbers, India operations look good. So that one is something that we look at. Ramco Cements has seen a sharp correction from the top, but now their focus on cost is coming into play. So that one as well, after the big correction that we have seen, deleveraging as well taking place, I'll keep an eye out on that. And Britannia, massive shots in the system yesterday. Volume growth as good as expected. So all these 3 stocks will be on my radar, particularly because they've been underperformers. Can they outperform for today?
Okay, all right. So yeah, a lot of those earnings reactions will play out, and we'll keep you updated on it. Let's start off with the equity call of the morning. Rhythm Desai of Morgan Stanley says India is in the midst of a significant positive wealth shock, which we believe has far-reaching implications for both macro and markets. Even though in the short term, the market remains offered due to near-term growth concerns, he says their portfolio position is cyclicals over defensives, large caps over small and mid caps. They're overweight financials, technology, consumer discretionary, and industrials, and they're underweight on other sectors.
Okay, well, so that's the view coming in from Rhythm at Morgan.